This meeting is being recorded.
Attendees में already 17 लोग हैं.
Hi all, this is Sandeep Shah here. We are just waiting for one more minute as participants are joining and we will start the call soon. Thanks for waiting. Hi all, we can start the webinar now. So hi, good afternoon and good evening to all the participants. I am Sandeep Shah from Equarius Securities. I welcome all the participants, investor and senior management to Netweb Technology India's post-result 1Q FY24 earnings webinar. Please note that this webinar is for 60 minutes and same is recorded. Now I hand over the floor to Sanjeev Sancheti, who is the head of Utus Advisors LLP and investor relation and advising firm of Netweb Technologies India, to introduce the senior management of Netweb and to discuss the safe harbor statement and the flow of the webinar. Over to you, Mr. Sanjeev.
Thank you, Sandeep. Good afternoon to all the participants. It is my pleasure to introduce to all of you the senior management team of Netweb today to present the call. With me is Mr. Sanjay Lodha, Chairman and Managing Director of Netweb, Mr. Naveen Lodha, Full-Time Director, Mr. Hriday Vikram, Chief Sales and Marketing Officer, and Praval Jain, who is the CFO and Chief Human Resource Officer of the company. Before I hand over the call to Mr. Sanjay Lodha for the opening remark, I would like to draw your attention to the safe harbor statement in the earnings update presentation, which was uploaded on the BSE and NSE website. Over to you, Mr. Lodha.
Thank you, Sanjeev. Good afternoon, and a very warm welcome to all of you to Netweb Technologies Q1 financial year 24 earnings webinar. I will take you through the business and operational highlights of the quarter gone by with our CFO, Mr. Praval Jain, will share the financial metrics. First of all, on behalf of Netweb team, would like to thank the entire investment community for the incredible response to our IPO. We really do not know how to thank each and every one of you for the faith imposed upon us. Your support and trust in us impose us for a greater responsibility to deliver and meet your expectations. I want to assure you that our entire team is committed to take Netweb to the new heights. Let me discuss the key business highlights. Later, Praval can cover the financial highlights. The total income Q1 FY24 stood at 602 million, a decline of 3.2 against the corresponding quarter in the previous year. In fact, some of the billing got spilled over to the next quarter resulting in this dip. Due to reduced income, EBITDA fell slightly to 90 million. Consequently, there was a marginal decrease in PAT from 56 million in Q1/23 to 51 million in Q1/FY24, while the PAT margin increased by 38 basis points to 8.5. Despite the decline observed in the current quarter, we maintain our confidence in achieving robust growth in the current financial year. It's worth noting that evaluating our business solely on a quarter-to-quarter basis might not provide a comprehensive understanding. An assessment based on overall annual performance would offer a more accurate reflection of our progress. The combination of a robust pipeline, ongoing capability enhancements, new strategic partnerships, and expansion of our operations and product portfolio positions us well for a sustainable growth while upholding our technological leadership. The recent notification from DGFT restricting import of servers with effect from 1st November 23 opens up a window of opportunity for us, and as it aligns with our Make India driven growth potential. Growth of LLM models and massive adoption of AI across businesses argues well for our growth. Business pipeline continues to be very strong at around 28,236 million. Out of that, 5,392 million we are already L1, means we have already won the orders, but the purchase orders have not come. Since the order cycle is around 6 to 9 months, we expect most of the orders against this to be received in the next 2 quarters. While July being a strong month, 994 million orders in hand, a large L1 pipeline, we are very confident to close H1 on a strong growth. Future opportunities. We are very excited to announce a significant milestone in our pursuit for technological excellence. With unwavering commitment to innovation, we have successfully entered into a transformative license agreement with a renowned industry leader like Intel. This groundbreaking partnerships empowers us to embark on a journey towards producing cutting-edge, high-end computing system based on Intel's next-generation architecture. We also plan to introduce low-power RISC-based ARM architecture-based high-end computing system in the Indian market. This will be very innovative. We believe this is a significant step forward, as it will help us to acquire big-ticket cases where enterprises will be compulsorily need the lowest footprint of data center, high-end servers, and multiply the performance of systems with more cores and power per watt. In response to the dynamic shifts and evolving landscape within our industry, we are proactively positioning ourselves to harness the full potential of emerging opportunities. With a steadfast commitment to innovation and growth, we are embarking on a strategic initiative that underscores our dedication to staying at the forefront of technological advancement. Central to this initiative is our decision to establish a state-of-the-art surface mount technology SMT line within the forthcoming 6 to 9 months. To ensure the swift realization of the endeavor, we have elected to set up our SMT line in a rented premises. By utilizing the rented premises, we are poised to expedite the deployment of our SMT line, effectively accelerating our time to market for cutting-edge products. Emerging businesses. As we foray ahead in our journey, a window of opportunity awaits us. Mass adoption of AI in enterprise and general workloads by large corporates is generating very large requirements of AI compute systems. Fresh requirements of cyber-secure, hardened, high-end computing system, especially amid latest cyber attacks on the foreign OEMs, gives a big opportunity for us. Large learning models, LLMs, in such opportunity that it compels us to create a new vertical requiring very high-end AI compute systems. Private 5G architecture have major dependency on high-end compute system and is creating altogether a large opportunity. Adoption of private cloud by BFSI, specifically the public sector banks, is a big-time opportunity for us, as more and more banks are coming out with tenders for the private cloud deployment. Adoption of HPC in the oil and gas sector is also on the rise. Having worked on migration of workloads of HPC of one of the India's largest oil and gas exploring businesses puts us in an advantageous position to capitalize on this large emerging opportunity. We are progressing well on our foray into the network switches and 5G O-RAN. Network switches is planned to be rolled out by end of Q3, while 5G O-RAN is expected by financial year 24. Apart from the above emerging opportunities, national strategy on AI with the allocation of more than 50,000 billion also provides a significant impetus to our business. I would like to hand over to Pravar to provide you updates on the financial numbers. Thank you.
Thank you, Mr. Loda. Good afternoon, ladies and gentlemen. Many thanks for joining this earning webinar. I will give a brief overview of the financial numbers for the quarter before we open up for the Q&A session. I hope everyone would have got a chance to look at the earning presentation and the press release by now. While our CMD has already covered the reasons for the dip in business, I will try to explain in a more granular manner the financial performance of the quarter on by. As already explained, our revenue from operations fell by 13.7% year-on-year basis from 693 million in Q1 financial year 23 to 598 million in Q1 financial year 24 due to the spillover of billing into the next quarter. Our gross profit grew by 14.8% from 193 million in Q1 financial year 23 to 222 million in Q1 financial year 24. This growth was on account of higher gross margins. Our gross margins grew by 920 basis points as compared to Q1 financial year 23. This happened due to some higher margin orders being executed in the current quarter. However, over the year, margins should average out to the past trend of over 27%. There was a fall in operating EBITDA from 94 million in Q1 financial year 23 to rupees 86 million in Q1 financial year 24. This was on account of higher employee benefit expenses, which increased by around 95% from rupees 50 million in Q1 financial year 23 to rupees 98 million in Q1 financial year 24. This was on account of ESOP cost of around 35 million in the current quarter and increase in employee account whereby we added 80 people during this period. The increase was partially set off by fall in other expenses, which fell on account of lower sales related cost. Hence, EBIT margin expanded by 88 basis points to 14.4%. However, even though the gross profit margin will even out over the year, we expect to maintain at least these levels of operating EBITDA margins due to operating leverage as revenue starts climbing up in the coming quarters. PAT declined marginally from rupees 56 million in Q1 financial year 23 to rupees 51 million in Q1 financial year 24, while PAT margin increased by 38 basis points to 8.5%. Return on equity fell from 47.4% in Q1 financial year 23 to 16.7% in Q1 financial year 24. The main reason, or the dual reason for this impact is the increase in net worth on account of pre-IPO equity money coming in and a slight decline in PAT levels. During the quarter, net asset went up to rupees 1,115 million from rupees 510 million in Q1 financial year 23. While cash conversion cycle increased to 140 days from 84 days in Q1 financial year 24. This increase was largely due to one large customer outstanding of rupees 432 million against a large order, which was subsequently realized in the ongoing quarter. This was a one-off situation which is unlikely to happen in future and hence can be assumed to be an outlier. While we continue to remain focused on our strategic priorities and growth pillars, laying emphasis on our long-term goal of sustainable growth and profitability, I would like to assure you that we are confident of achieving strong revenues and profit growth in the current financial year. With this, now I hand over the call to Mr. Sandeep Shah.
Yeah,
Thank you.
thanks, sir. So with this, we come to the end of the opening remarks. We can now open the floor for Q&A. Participants, request you all to restrict to 2 questions in the initial round, and for more questions, request you to join the queue again. Participants, whoever wants to ask question, please press raise hand icon on your screen, and once your turn comes, unmute yourself, announce your name and company name first, and then ask your questions. Once you get the reply to your question, please lower your hand on the screen. Participant, please raise your hand icon to ask your question. Yeah, Mr. Satendru, you can go ahead and ask your question, unmute your line and introduce yourself. Thanks.
Hello, can you hear me? Is the line clear?
Yeah,
Yes,
we can
we
hear
can
you.
Okay. Well, congratulations on a fairly good quarter EBITDA margins. I had a couple of questions as regards to the PPT that you sent out.
Mr. Satendru, your voice is coming with an echo.
Just a sec. Is it better now?
Yeah, much better.
Okay, I hear some sort of an echo. So my first question is really on the asset turnover ratio. I see that fixed assets have increased by almost 95% year on year. That's why the ratio has come down. Is there some sort of specific guidance that you want to give around how this ratio should evolve in the coming quarters?
I think let's go to Sanjeev. Yeah. So just to answer that some of these assets, our second facility was being built and those have been capitalized. I think that the revenue for that will come in the coming quarters. So I would say that an average of what we achieved in the last year could be taken as a medium to long term benchmark. But as we build capacity, there will be times when before they come into production, we will have some of these dips which you see today. And also, secondly, that this quarter was also a bit muted. So obviously, the numerator also was smaller. So I mean, these are the combined reasons which you could say where the asset turnover ratio, fixed asset turnover ratio. So we can look at a range which would be largely between anywhere between 15 to 20 on an average.
Okay. My continuation on this question is, in your IPO document, you have mentioned that approximately 53-55% of the revenues are coming from government contracts. So is it fair to say that the revenue generation is lumpy, meaning in Q4 you generate much more revenues than the other quarters? And does that mean that the EBITDA margins of the last quarter are significantly better? So do you see any sort of lumpiness in general?
Can you just, I basically missed your voice in between. Can you please repeat your question again, please?
Yeah, Satendru, it's again from your side, there is a lot of echo when you are asking questions. So if you can remove the headset and speak from the mic, it would be great.
Okay.
Mr. Satendru, if you can repeat your question, it would be great.
Yeah, can you hear me? Is it better?
Not really.
Okay, then I'll probably just type my question on the Q&A panel. That's easier.
Yeah, if you type it on the chat, we can kind of take it and then answer it from there. And probably Sandeep can read it out for us.
Yeah. Yeah, participants who have questions, please raise your hand. Yeah, we have Mr. Vikrant Gupta from ICICI Prudential Life Insurance. Go ahead, Vikrant, unmute yourself and ask your question.
Yeah, hi, am I audible?
Yes.
Yeah, you are audible.
Yeah, so two questions from my side. The first one would be on some data that you have given in the presentation around the pipeline and the L1 orders. So what I would like to understand is how does this translate into your revenue exactly? What is the execution timelines, and how likely is it that the L1 orders actually translate into your order book for the following year? That's one. And the second one is we have talked about how we would like to diversify on the HPC side into the oil and gas sector. So if you could provide an update on any meaningful conversations that we're having with any customers, and is something likely to be closed during the fiscal.
Yeah. So thank you, Vikram. Actually, thanks for this question. Actually, basically, if, as I have always maintained, that our business is quite driven on by the pipeline we work upon, because basically our customers are basically high-end enterprise customers and government customers, R&D customers. Primarily, we really work. Pipeline is very, very important for us. So, we, as you know, as I think we have shown on the presentation, we have a pipeline of around 2,800 crores approximately, if you really see. And out of that, we are already L1 in approximately 539 crore worth of basically tenders or the orders or the cases actually. So what happens is that basically, since these are all large purchases and infrastructure kind of basically capital purchases, so once you get L1, it takes time for the order to come in and all. So normally what we have seen is that the normal time it takes for after you become an L1 to get to PO is somewhere around 6 to 7 months approximately. So we definitely see that these orders will be coming in the next quarters to us, and and as you know, our execution cycle is somewhere around 6 to 12 weeks, or in some cases around 16 weeks. So basically, we feel we'll be able to build them out easily. Okay, and as regards the breakup is concerned, approximately if you really see out of this, basically the L1 orders, we have the mix is almost on the same as basically for the cloud and storage and for the AI systems and all the different areas which we are working on. So that is one. And is basically, if the second question was on oil
and gas.
Yeah, on the oil and gas, basically, yeah. So basically, as you know, we have been working on oil and gas HPC applications, and there are very few people in the country who have been doing that. And we already work with a oil and gas major. We completely migrated all their applications, and we work very closely with them. So at this point of time, what we are doing is we are working with various ISPs like Slumberjay and other basically ANSYS and others actually, so as to basically certify our systems and stack with them, so that more and more of these oil and gas application people will be using our products and services. Like we are into a very, very close discussion with ONGC primarily at their various locations at Dehradun, Mumbai and various places wherein we are trying to work with them. So that is another one which is a large consumer for oil and gas that we are expecting soon. And since we get the ISP certification with the other ISPs, that will help us to get into go deeper into different oil and gas customers.
Yes, Vikrant, does that answer your question?
Yes, it does. Thank you.
Thank you.
I'm just requesting all the panelists to use only one device at a time, and go on mute when you are not asking a question or answering. Thank you.
Yeah, thanks, Vikrant, and thanks, Sandeep. Participants, if you have more questions, please raise your hand. Sir, this is Sandeep Shah here. Let me ask the question. Sir, with 1Q execution, you said in your TV interview that FY24 sales would be higher than 600 crores. Can you throw some light in terms of segment-wise growth perspective? Which segments would be high growth segments in FY24?
Yeah, we have already worked on it, and I will let Prabal explain it to you.
Yeah. So, Sandeep, if you will see in financial year 23, around 39% of sales were from HPC's vertical. So we expect around the same percentage, around 38-39% to be the sale for the current year from the same vertical of HPC. Private cloud and SCI was around 33%, which we expect to be in the range of 33 to 34% again. And AI system and enterprise workstations was 7%, which we expect to be around in the range of 8 to 9%. Then high performance storage was in the range of 7%, and we expect it to be muted at that level only. And data center server was 6%, and again we expect it to be in that level, at that level only. Software and services, which was around 2%, we expect it to be in the range of 3 to 4%, and rest is other for spares and other things. So that is the breakup which we expect for the current year.
So if you really see, basically the areas which we have been working, like basically supercomputing, private cloud, all these are very, very relevant areas today actually. And basically with AI progressing and the way we are seeing that, so definitely we feel that all these sectors will remain very, very since we are growing already at a CAGR of somewhere around 40% approximately, which we are targeting. So all the areas are growth areas for us, and all these areas are growing at a good momentum and giving us a lot of pace. Okay, so this is how the split looks like, and we are definitely working on AI. AI can be a game changer. We can even, this is exactly what we are looking at this point of time, but we feel that the percentages which you have mentioned on the AI side, it can be slightly higher than what we are really expecting at this point of time.
Thanks. This is good enough. Participants, if you have questions, please raise your hand.
Question on the chat box or something, actually, in case if we can take that. Yeah, Mr. Chakrabarti had a question.
Yeah, I think he has not yet typed.
He's still typing. Okay, no problem.
One question is already typed.
What is your capacity utilization for this quarter?
DBT expansion.
May I ask for the
What is the
capacity utilization for this quarter? Will you speak on the status of the DBT expansion? What kind of asset terms do you expect from this thing, and how does this improve our strategic offerings in the market?
I think you mentioned I think you mean the SMT expansion project, as far as what I can understand. So basically, capacity utilization as regards will remain almost all basically, because as I mentioned initially also, in our case, our capacity utilization remains somewhere around 65 to 70% approximately. But what is exactly is happening is that we are getting into a lot of SMT manufacturing. As I think I indicated on my opening remarks, we are trying to get into basically manufacturing of ARM-based servers. Okay, we are basically already have a license partnership with Intel, wherein we will be doing the next generation, basically the motherboards designed with Intel, and those will be manufactured. We are working on various AMD different architectures. So we have a complete array of products coming in. So that will need us to basically, if we have the assembly line, that's the reason. Basically, initially what we had indicated was that the assembly line setup will be happening. Will be started getting benefit of it maybe sometime in the 25 actually, financial year 25. But we want to do it faster, because basically since we will have a lot of products and they will need specialized kind of manufacturing capabilities, so we want to rush that faster. That's the reason we are trying to set that up faster. Basically, earlier it would have taken us a year approximately, but now we are pulling it to around 6 months, so as to basically enhance our manufacturing facility. So that is there.
The second question is roughly 55 to 55% of sale are from government. Yeah, 45.
No, I don't. I really basically actually, if you really see my total, maybe last 3 years approximately, the sales around 50% of sale has been coming from the government, and I don't see any lumpiness in the sale primarily. And we already know that there is a new notification which is there in the pipeline. Basically, as regards the DGFT notification is also there. So that will push even the corporate sector as well. And I don't, because the government spending on supercomputing, on AI, and all those things is really high. And we have a very huge funnel already, actually, really speaking. And that really speaks about the kind of basically the order projections we have. So we are not seeing any kind of lumpiness in the game.
I just want to add here,
we can add.
just to add that this quarter's revenue, actually government customer was about 46% and non-government was 55%. And as Mr. Sanjay Lodha has already been telling that this kind of fluctuates between 45, 55, 50 or 45, because that's how the nature of business is. That's one. The second thing is that H2 will always in this business be heavier than H1. It's like a 1/3, 2/3 kind of a situation. And generally Q4 and Q3 or Q4 are the heaviest quarter. So to that extent you are right, but that's the nature of the business. Also request any anonymous attendee to please give your name and the organization name for us to be able to answer your question.
Yeah. Vikrant from ICICI Pru Life, you have a question? You can unmute yourself and go ahead.
Yeah, thanks for this follow-up. So, 2 questions again. If you could talk a little bit more about the plan to introduce the ARM-based servers, where you've written that these servers are largely optimized for the newer AI workloads. So is this largely an export opportunity that you see over the next few years? And secondly, if you could talk a little bit about what you have mentioned in your investor release about the opportunity arising out of the import restrictions on servers. So these 2 things, if you could throw a little bit more light, sir.
So your first question was on the AI side. So basically, on the ARM-based servers, actually, really speaking, if you really see up till now, whatever Intel and AMD processors we use, they are all primarily x86-based machines. Okay, and what has happened is that ARM is a processing technology which is primarily based on RISC, and it's low power. So today, the major problem of the data centers, because wherein the compute is increasing, the power requirement is increasing. So what is happening is that all the data centers, the major worry is the power. The power consumption load is increasing. And as you know, ARM is a very, very innovative technology which really reduces the power consumption and gives you very powerful output. There are 2 advantages of ARM at this point of time. One is that basically it is low power. The second is it can be very well AI optimized. You are already aware NVIDIA was trying to acquire ARM, but was not able to acquire it because of some restrictions to the US laws. So even NVIDIA was really eyeing it in a very big way. So we will be one of the innovators. Actually, in India, ARM servers are not being manufactured. We will be manufacturing ARM servers. We feel there is a huge opportunity for ARM in India, because basically, if you see the kind of chat GPTs and the basically language models which are being processed at this point of time, we feel that will really exponentially help. This particular ARM can really help the AI workloads to really excel and can take advantage of it very, very well. So that is there. Plus, basically, as regards your question on the export opportunity, definitely there can be export opportunities. But actually, in the current year, while we are developing it, we are trying to target the domestic. and definitely we will target the export opportunities also, because large computes, the supercomputers which are going to be installed, that they will be on ARM. So we are getting future ready there. Yeah, and the second question was that basically regarding your basically the import restrictions. So Government of India, as you know, that has been very instrumental in requesting or basically asking people to manufacture in India. In that, continuing that motive only, they are coming out with these restrictions, because you know the security has been a major concern actually, wherein basically so they were trying to basically request most of the manufacturers to come into the country, and they wanted to really promote domestic manufacturing. So I think this is the direction in a very right way, in which they are basically putting restrictions directly, because as you know, with the kind of the WTO restrictions, they cannot put additional duty on something being imported here. So they put it under import licensing. So this is very similar thing what happened to the TV industry, maybe around a year back approximately, wherein basically TVs less than 40 inches were not being manufactured in India. They put the similar kind of restriction there, wherein most of the TV manufacturing, local domestic manufacturing, that is really taking up very well. Okay, and as regards the, so we personally feel this is a great move. This will really help, because what happens is no one can really import complete servers from the servers which are not made in India. They cannot import the servers into the country. So definitely this will help us. Up till now, Make in India benefits were primarily available in the government sector. So we are not only completely dependent on Make in India, because 50% of sales is from government, 50% of sales is from high-end from the enterprise customers, but still basically Make in India benefit. Now even on the enterprise customers also, they will also have to look only for Make in India products, because primarily government is trying to restrict the completely manufactured products from outside.
Yeah,
Understood. Thank you.
Thank you, sir.
we have next question from Rohan Nagpal. Please unmute your line and introduce yourself before asking the question. Thanks.
Yeah, hi. Thanks for the opportunity. I just want to get your view on I just want to understand what drives the underlying demand trend over here, where you're generating about 33% of your revenue in Q1 in H1 and 2/3 of your revenue in H2. Like, if you could just talk about the underlying sales dynamics over that, that'd be helpful. Thank you.
Mr. Sanjay sir, you have to unmute your line.
Are you able to hear me now?
Yeah, we can hear you.
Okay. So hi Rohan, it's a good question actually, and basically let me tell you what happens is that basically in our kind of business, or basically the business we do is primarily for high-end compute, and these kind of basically purchases are for B2B kind of places wherein people use it for, it's a capex purchase. Either it's a supercomputing or a cloud or AI system, it's basically a capex purchase. And if you see my customers also, they are always high-end enterprise and the government R&D primarily. So basically we are not too much into the SMB kind of space. So what happens is that the first quarter, normally what happens is that people go on for planning and all those kind of basically what the compute requirements are and all that. So slowly that gets picked up. Even in case of government also, as you know, the new regulations, what they are doing is at the end of 31st of March, all the money is going back to the respective bodies which are not being utilized, or so unutilized funds are not there. The new funds get generated, the new funds get sanctioned for the government also, and the same thing happens in the private segment as well. In the corporates also, the first quarter primarily they primarily try to lay out the budgets and all those kind of things. So I think that is the basic reason. We have seen this traction over years actually, and that is our industry has been seeing that trend regularly. That basically the first quarter is the H1 is lighter than the H2. Around 1/3 of business comes in H1 and around 2/3 business comes in H2 actually.
Understood. Thank you.
Thank you.
Yeah, Sanjay sir, we have follow-up question from Satyendru in a chat box. So what he's asking is, in the AI systems and enterprise workstation segment, do you see any challenges procuring CPUs from the likes of NVIDIA and AMD? And are you already incorporating 5 nanometer or 3 nanometer computer processor? Is this being demanded by customers, and are those in the pipeline?
Yeah. So basically, as regards, you know that NVIDIA is really has a definitely NVIDIA GPU demand is at its peak actually, and very rightly said, it is definitely at its peak. But fortunately, we are very close to NVIDIA, and basically we have projected all our requirements very well with them. So hence, basically, there are some once and twice we have slightly delays, but primarily, but our supply has been assured by them, both by NVIDIA. And as regards the processors are concerned, we use all the latest generation processors for NVIDIA and for AMD as well. And if you see, 90% of our GPUs are from NVIDIA, only 10% of GPUs currently are from AMD. As regards CPUs are concerned, basically we are using both the processors, Intel, AMD, both are being used for microprocessors. And as you know, the new technology from NVIDIA, that's the reason we are getting into that. That is basically the ARM technology that is primarily from NVIDIA, wherein basically they are trying to use their own processor, going away from the x86 domain into the RISC architecture. So that is another very innovative product which will have so as to cater the AI market very well.
Thank you. Thank you. Participants, if you have questions, please raise your hand. We have another question on a chat board from Mr. Kumar L. How much order book we have currently, and how much we can get in coming year?
Yeah, actually, basically, as you know that, as I think I mentioned a couple of times, that basically our company cannot be judged on terms of order book, because basically our order book, the execution cycle is around 6 weeks to 12 weeks in normal cases. Like basically, if I have an order for 100 crores at this point of time, if my order book is 100 crores approximately at this point of time, so definitely that will be built in the next 12 weeks for sure. Okay, and in the meantime, the new order book will be built up. So what happens is that basically we completely are driven by our pipeline. Okay, so basically, if you see our pipeline, as I mentioned, is already 2,800 crores, and we are already L1 in more than 500 crore worth of basically cases. So that will all get converted into orders, and our order book will increase. But as soon as it comes in the order book, basically within 6 to 12 weeks, normally the orders get executed.
Okay, thank you. Participants, if you have questions, please raise your hands.
So I think there's another question from Satadru. Satadru, just can you just throw a light as to from which organization are you representing? Sorry for this, but just to know.
Yeah, Satyendru, you can go unmute and answer.
I am part of the Chakraborty family office based in Kolkata.
Okay.
Yeah. So your question is, can you throw some light on Skylus product? Skylus is a private cloud product. Okay, basically it's a private. Basically, as you know that we do completely end to end. The hardware is completely designed by us. The software stack is from us, and the service stack is from us. So basically, we provide end to end, and Skylus is a very, very popular product which we sell. And basically, it's being used extensively in the industry and our private cloud business. Skylus is an important product. But basically, so customer, if you really see, all kind of customers, all kind of large enterprise customers are using our Skylus for their private cloud. As you know that basically for large customers, private cloud makes a lot of sense, because basically because they have a huge compute requirement, they cannot afford just to go on the public cloud and pay the bills seriously. So better is to go on the private cloud, and all of our clouds are hybrid. So in case there is a burst workload, we will migrate to the public cloud with ease. So basically that makes a lot of sense. The best example today is basically, as you see, the BFSI, all the public sector banks, they are all trying to get on private cloud. And the market with VMware and Red Hat, actually, definitely, they are only a software company, primarily, whereas we are an end-to-end company. We have our own design hardware completely, and the software and the service stack. So that is one, that's a major difference, which I would like to say. The other is that their products are, our products are much more innovative and very well designed. That's the reason we are getting adoption, and we are even able to take some of their customers.
Thank you, sir. We have one more question in the chat box. This is from Mr. Vidhu Chabra. He's wondering, are you looking to collaborate into quantum systems?
Yeah, quantum is basic. Excuse me. Yeah, so basically quantum is a game. Basically, currently the market is still not ready for quantum. We have our plans on quantum. I don't think I like to disclose at this point of time, because basically that is a, we definitely feel within the next 2 to 3 years, definitely the market will be ready for that. We are completely geared on that. So that basically we can take it on at that point of time.
Okay, thank you. We have another question from Sandeep Batra in the chat box. We have talked about foraying into 4 countries in Europe and the Middle East. What product lines we are targeting there, and which countries we are talking about here?
Yeah, so basically we are basically, if you see our product line, we are targeting our supercomputing solution. Again, we have a complete stack there, include our hardware and software. Same thing for private cloud and HCI and AI. These are the 3 areas which basically we are targeting to take into these different countries. The countries we are targeting at this point of time is Middle East is one of the country, and then we are targeting 4 countries in Europe. Okay, so that is one is your Germany for some of automobile industries we want to target there, and the telcos we want to target there. The other is UK, and I think we have 2 more countries there actually. So maybe I can let you know later. And the strategy is that basically, since our products need support and service, so properly, because all these are enterprise production grade systems, so we need to have people on quick support available in those countries. So we are trying to have people there, to have our trained resources there, so they can support the people there.
Yeah, we have another follow-up from Satendra Chakraborty. So what he's asking, is there any guidance on cost of material consumed for FY24 and steady state moving ahead? It was around 73% in FY23. What kind of challenges, opportunity do you see procuring these materials for Netweb in terms of supply chain, availability, pricing, customer concentration, etc.?
I will let Prabal answer this for you.
Yeah, thank you, Satendra. Regarding the gross margins, I think so we are talking about. So these have been in the range of 27% for the last year, and for this quarter, abruptly it was around 9 basis point higher. This was due to the fact there were some of the higher margin orders which got executed. So for the year, we expect that the margins will remain in the range of 27-28%. So material cost will be around, you can say, 72-73% range only. As regard your other question, I think so Mr. Lodha has already answered that supply chain, we have long-term relations and we are very close to our suppliers. So supply chain will not be a problem for us.
Thanks. Participants, if you have questions, please raise your hand. Sir, meanwhile, let me ask one more question. Sir, in your PPT, you have mentioned that there is a heavy adoption of private cloud in a PSU bank. So can you throw more light on this, and how are we participating in this emerging opportunity?
Can you come again on the question, please? I missed your question.
Yeah, in your PPT, you have mentioned there is a heavy adoption of private cloud in PSU banks in India. Can you throw more light on this and how are we participating in this emerging opportunity?
So basically, what has happened is that basically private cloud, if you really see the adoption of private cloud in the BFSI segment, primarily in the public sector banks, is really taking up very, very fast. The first among them is Bank of Baroda, which is already out with an RFP and it's almost about to get closed. Maybe we are targeting it, maybe even I think this quarter positively should get closed actually. So so basically it makes a lot of sense for them because they're able to, because it's a huge amount of, all these banks are large banks. They have a huge amount of data. Okay, so what happens is that basically if it is handled on a private cloud, if they are more secure, they are basically, the cost and the billing is also very rationalized because there's a continuous usage, they are able to manage it well. So that's the reason adoption of private cloud is one of the best ways to go about it. And currently, if you see Bank of Baroda, Bank of India, Canara Bank, all the three RFPs are already there and almost to verge of finalization. But you will see all the banks will definitely have private, all the public sector banks will have private cloud. And we, since we are there in the private cloud segment, and we have been instrumental with some of the large core banking software providers also. So definitely, I think we are very well posed to take it. And in that situation, there is, in cases of most of the large, even if the case is being bid by a large global system integrator or something, they definitely in turn talk to us and takes our solution. So we are seeing a lot of traction around this, and I personally feel next 3 to 5 years or 3 to 4 years is the time wherein basically the private cloud SCI will really dominate into the entire public sector.
Thanks. We have a follow-up from Vikrant Gupta from ICICI Prudential Life. Unmute yourself, Vikrant, and go ahead.
Yeah, the question was around the seasonality that we see in our business. Is this seasonality also present in your private cloud implementations and your storage solution sales?
Actually, really speaking, this is not the trend is like that only, because if you really see, the private cloud is also a kind of a capex purchase, same as supercomputers. So definitely in H1, basically the H1 is around 1/3 of the business and 2/3 of the business comes from the H2. That has been the normal trend. But adoption of private cloud is increasing, and basically in the first quarter, normally people do the planning and all those kind of things. Since basically this is a large capex purchase, and basically this the entire company's data is completely hosted on that cloud. So it is a very, very critical piece of machine inside the organization. So what I have personally seen in my experience is that I think the same seasonality is maintained as regards even storage also, because storage is normally also a subset of the entire requirement. Okay, so we have seen in the storage cases also, and we do only high-end and basically large storages. So in that also, I think this maintains.
Okay, so in storage in FY23, I think we saw Q1 sales being higher than Q4. So is there anything specific there?
Actually, what happens actually for us is that storage is a subset of our main product actually. So what happens is that basically with the supercomputing solution, the storage goes, with the cloud also storage goes. Now basically in case of, really speaking, we really don't focus only on the high-end storage kind of a solution. Okay, the major focus goes into the kind of a solutions primarily on the private cloud, HCI and all. The higher storage is normally a subset of the like if you sell a large supercomputing solution to a main algo trader, maybe basically large algo trading organization, or basically we do analytics trading. So we give them a supercomputer, and then basically they need a fast storage, so that basically all the kind of data analytics which they do, that needs to be done. So basically they need that. So since we have, so basically it's a subset of that. So primarily storage, we personally, I have not, we feel storage will only grow as per the other growth is happening. So if you see, the real growth will come from these segments like your supercomputing, the cloud, the AI and the services. These are the areas which will really be doing more progress.
Understood. Thank you.
Yeah, we have one more question from Nishant Vas in the chat box. There are two questions. First being, can you give more perspective on the kind of customers in India who are adopting high-end AI compute for things like large language models? And is this private or government driven? And what kind of other partnership we can expect now that we have announced partnership with Intel and ARM-based company?
Yeah, so basically, actually, really see today, basically AI adoption is happening everywhere. I'll tell you all the large GSIs, which I call them like Infosys, TCS, and all these kind of companies. Actually, they all have customers who are asking for these kind of solutions. So definitely, basically, what happens is that we really work with them so that they need the solutions and the system so that they can work on that. That is on the private side. So you recently heard some of them announcing some kind of large setups, primarily providing it so as to catch up with the adaptive AI. The other is that the government is very, very serious about it, and basically, I think we are at this stage. Not like to mention very clearly, but there is a heavy activity happening inside the government because they are understanding the potential of the LLMs and the kind of basically adaptive AI kind of traction which they are getting. So, and you already know that like Aravat we deployed last year, which they are considering only as a POC. And primarily the new AI policy is already announced by the government, and huge amount of money is being sanctioned out there. So there will be a lot of buying from the private as well as the government. So AI adoption is really something which is really spreading very, very high. And we are all posed to take that up as we have the right mix of products. What is the next question?
Yeah, he has a second question for Make in India due to policy changes recently. How are you engaging with potential customers? Would you need to do additional investment in case this opportunity becomes higher share of your revenue?
Yeah, actually, basically, the Make in India, since basically we are already part of the government's PLI policy, we are already basically manufacturing most of all our products in India. Our software is being developed in India. So government is really, we are getting good support from the government. We are already engaging our customers, but basically with the new policy, which is the new DGFT notification that has come, that will definitely need even all the private enterprises also who were earlier able to buy something from foreign manufactured goods, they will be also turning back to us. So definitely we feel there is a lot of potential here. But again, we want to keep our focus here. We don't want to become a box seller, as basically that was never an intention to become a box seller. We still like to maintain that we want to be a high-end computing solutions, product and solutions company, not become a box seller, just basically just selling server boxes or something of that nature. That has never been an idea. That is very well reflective from the kind of gross margins we have. So we would like to maintain the core of our business. I have maintained it for 25 years and still would like to maintain that.
Yeah, we may have a time for one more last question. Participants who have a question, please raise your hand. Sir, let me ask the last question. In terms of this DGFT order which has come and been restricting imports of some of the computer hardware, it will impact some assembly imports which we do and our execution of order ahead?
No way, actually. This will not impact us at all. This is basically I cannot think about one point where it is going to basically block us or something of that nature. It's an enabler for us, and basically government wants to manufacture in India. They are very clear about it. They have come out with wonderful policies, even for the semiconductor side and all the areas. They have wonderful policies, and government is hell bent upon that manufacturing can happen in India. You have already seen the mobile phone case. I have already mentioned to you about how the televisions less than 40 inches, how they have converted that, and they are very clear that because you can understand two things. There are two areas where this is happening. This is just not to protect the industry or something of that nature. One is the security concern. You are fully aware about the security concerns which is there. And this is not only India, the other large country, one of the largest economies in the world is also facing similar challenges from a third country. So even they are also trying to restrict. So basically, in the same direction, security is a major issue. So government understands that very well. Only once things are getting manufactured locally, they can really tackle that problem in the long run, and it can become a major issue. The other is that basically they have to control the balance of trade. The import bill is going up like anything, and actually they really need to do that. And you already know that some of the world major mobile phone manufacturing companies are already into the country and very successfully they have been doing it. So we definitely feel that I think they are in the right direction, and I think this will really give impetus to the local manufacturing and basically, and that will also help us to develop technology locally. It's not only manufacturing. Since this will happen, it will also help to develop the technology also. And the most important is they are targeting the semiconductor industry. They want to develop the semiconductor industry. Until unless the manufacturing shifts into the country, the semicon industry is not going to come to India. So basically, this will also trigger the growth of the semiconductor policy for the government. So I think they're all positives actually. Thank you.
Okay, sir. And sir, last question from my side, and then we can conclude the call. Status on commercialization of new product lines in the telecom segment on the network switch and 5G O-RAN, and any initial response from the client on any of the ongoing POC proof of concept in these new product lines?
Yeah, networking is almost all. Basically, we have really received very good interest on our products. We have already started using on some of our cloud projects, and one of the good large cloud projects which I'm not able to announce at this point of time, but we are trying to adopt that there. So as you know that the networking switch demand is heavy actually in the market. So we definitely feel they are all on track, and basically in the beginning of next quarter onwards, we will have the networking completely rolled out. And as we mentioned to you, by financial year end, basically our 5G O-RAN stack should also be ready, and we will be there in the Indian Mobile Congress. If any of you are there, we'd like to showcase our products there. Then you can have live view of a Make in India 5G kind of a solution which we are showcasing.
Okay, fair enough. Due to time restriction, we need to end this webinar. And thank you all participants, senior management of Netweb, and Mr. Sanjeev sir for attending the webinar. Sir, Sanjay sir, you want to give any closing remarks, or else we can end the webinar here?
I'm really thankful to all my basically investors, primarily for showing confidence in us. We are a 25-year-old company, and we are always committed. We have always looked and we have been very, very serious about our business. I'm completely involved into the business, and we will take it forward in a very good manner, and we will completely stand as per your expectations. Thank you.
Thanks a lot. Yeah, thanks a lot.
Now end this webinar, and we can leave the same. Thank you all once again.
Thank you, everyone. Thank you.